Welcome to Introduction to Ethics. In this short training video, we will introduce you to some practical ethics for health insurance agents. This training will give you some tools for navigating everyday ethical challenges in communications, finances, and customer service. Please keep in mind that this training is just an introduction and that the laws and ethical considerations it covers are not exhaustive. As an agent, you are responsible for conducting due diligence about laws, ethics, and standards that apply to your business. Let's begin by defining ethics and identifying their purpose in the insurance industry. Ethics are the principles that influence moral and legal decision-making. Ethics can be shaped by laws, company or industry standards, governing or regulatory bodies, personal values in most reasonable, good-intentioned people. Health insurance agents are obligated to behave ethically in all interactions with consumers, carriers, and other agents. Acting ethically protects agents, clients, carriers, and the industry. Unethical behaviors that violate laws, such as fraud or slander, can result in criminal charges or the loss of an agent's license. In addition, agents' behavior reflects on their carriers and the insurance industry itself. Public perception often views the insurance industry in a negative way, and customer satisfaction can influence whether current and potential clients think a carrier is trustworthy. Most importantly, consumers rely on their agents and carrier to protect their health and, often, a significant financial investment. Adhering to some basic ethics can enhance clients' experiences and ensure they receive the best knowledge and products available. Now that we've provided you with a basic understanding of what ethics are and their purpose within the insurance industry, let's discuss some laws and legal entities that influence ethics for the health insurance industry. Making ethical decisions can be challenging because ethics often occupy moral gray areas. However, many laws and regulatory bodies define certain ethical behaviors for health insurance in concrete ways. Agents can consult a variety of resources to determine how an ethical concern interacts with the law, including federal laws and institutions, industry regulatory bodies, state laws, common law practices, state insurance commissions, laws for licensing and continuing education. In addition, most carriers have their own policies and bylaws that govern agent behavior and how the company enforces local, state, and federal laws. There are many legal resources available to agents. For example, agents can choose to consult any of the following: Federal Insurance Office, Health Insurance Portability and Accountability Act of 1996, National Association of Insurance Commissioners, health insurance mandates, privacy and data protection laws like those in New York and California, general duty to act reasonably, common law negligence. Please note, however, that this list is not all-encompassing. Agents should consult these resources, their carrier's legal team, or their own lawyers if they are unsure whether a decision they plan to make conflicts with a law or legal body. In addition, agents should be familiar with all the laws and regulations on the websites for the departments of insurance for the states in which they are licensed. There are also important ethical matters that agents should consider regarding the type of service that they provide their customers. Let's look at how ethics should interact with our customer service practices. Insurance agents act as the carrier's representative to the customer, but their primary duty is to provide excellent service and product coverage to each client. To build client relationships, agents should be mindful of ethical customer service practices. Agents should provide each client with the best possible coverage to meet their needs and budget. In addition, consumers must have the final say in the products they purchase, even if their described needs are different from the products an agent recommends. Ethical sales practices ensure all current and potential clients receive equal treatment and adequate coverage. Agents should avoid discriminating against current or potential clients, especially based on a protected class like race, age, or sex, choosing clients based on their financial history or potential for a larger bonus or commission, underselling or overselling coverage to a client, especially based on their potential for a larger bonus or commission, churning, twisting, sliding, or otherwise misrepresenting a product and its benefits to the client. In addition to providing accurate and equal service to all eligible clients, agents should always practice due diligence. Due diligence is the act of providing reasonable care and attention to all aspects of an insurance transaction. Due diligence includes reviewing financial, legal, and contract documents to ensure they are complete and accurate, ensuring the integrity of these documents by not signing or fabricating information for the client, providing consumers with accurate, detailed, up-to-date information about their coverage, including available products, terms of payment, changes, and exclusions. Product awareness is a significant part of due diligence. Agents must be able to provide expert knowledge of all the products they intend to sell. They should be able to answer questions, make recommendations, and explain complicated terms to clients as needed. In some cases, product awareness may also require agents to be aware of relevant competitor products. In order to provide ethical customer service, agents should always provide only accurate product descriptions, enable customers to choose the best coverage for their needs and budget, diversify your client pool, choose clients from a range of financial backgrounds, use continuing education, personal research, and carrier documentation to learn about products and laws. Ensure each client has sufficient coverage. Conversely, agents should never alter, sign, or change contracts, lie about or misrepresent products, especially to make a sale, discriminate against current or potential clients, prioritize bonuses or commissions over client needs, work off old product material or carrier brand materials, under or oversell clients based on products or budget. Additionally, agents should always remember that many ethical sales practices are backed by laws, regulations, and carrier policies. Now, let's discuss the role that ethics should play in our communication practices and describe how to communicate ethically in health insurance. Clear, good faith interactions will prevent misunderstandings, protect company and industry reputations, and ensure customers receive the best possible information about products and policies. Therefore, agents have a duty to communicate ethically with their clients, peers, carrier, and competitors. Agents have a legal obligation not to commit libel or slander, which are damaging written or verbal remarks. Agents have an express responsibility to represent their carrier in a positive way and to uphold its brand image, including using its logos in approved ways. Libel and slander are most likely to occur when discussing other agents, the carrier, or competitors. For example, many states have laws regarding how or if agents can offer competitor analyses or comparisons to clients. Agents should also refrain from discussing their opinions about clients or their clients' personal, sensitive information. Agents should be careful to share only opinions or information that is true and to present their views in a neutral or positive way. Furthermore, agents should refrain from venting or gossiping about any business or person connected to their work. In some cases, such as those involving health data, this behavior can also violate privacy laws. Libel, slander, and privacy and data laws still apply in online interactions, even on personal accounts. Agents should exercise the same care online to protect personal information and company reputations as they would offline. In addition, they should ensure that any online marketing, including personal posts about products, aligns with advertising regulations for insurance and the marketing and promotion guidelines for their carrier and the platform they are using. Furthermore, agents should attempt to avoid or diffuse tense online discussions. For example, Conversations with potential clients or about a negative online review should be moved offline or to a private messaging system. In addition to making all communications in good faith, agents should follow some best practices in record keeping. Agents should adopt only written policies and procedures. These may be implemented by the carrier or created for the agent's own workflow. Written policies and procedures create a paper record and prevent confusing, mistaken, or illegal verbal interactions. Neither agents nor clients should ever make or accept verbal terms. Furthermore, a complete, accurate written record protects the agent. Documentation can help resolve disputes, legal proceedings, or simple client misunderstandings. Agents should also practice reasonable, timely response. Timely response is a common courtesy and demonstrates good customer service skills. Timely response can help prevent missed payments, lapses in coverage, and client frustration or loss of interest after long gaps in communications. Timely response also applies to communications with carriers. Agents should strive to respond to all communications, including phone calls and emails, within a reasonable amount of time. Both carriers and state DOIs require timely response to be made within a specific number of days. Agents must respond by the shorter of these two timeframes. However, agents may still need to exercise judgment about the order in which they respond to concerns, considering urgency and related time-sensitive deadlines. Policies, payments, and enrollment periods are all time-sensitive. Most consumers find health insurance products confusing or unfamiliar. Therefore, ethical client communications must be clear, consistent, and accurate to prevent misunderstandings and ease any anxiety clients may feel about their coverage. Agents must make accurate disclosures about policies and products, use good faith sales practices, and never use scare tactics to promote a product. Provide complete, accurate disclosures, including information about exclusions and limitations. Update clients immediately about changes in terms, denials, or other coverage options. Provide all the resources necessary for clients to manage their account, such as access to portals or helpful phone numbers. In addition, agents must maintain the integrity of the application and other contract documents. This includes not signing documents on the client's behalf and filing paperwork on time. Finally, agents are required to notify carriers, clients, or legal bodies about complaints, mistakes, or unethical practices that affect them. These may include reports about other agents if, for example, an agent overhears a peer revealing HIPAA-protected information about a client. Some events requiring notification, like sharing confidential information, may be serious. However, simple mistakes and responses to customer feedback can be used to improve training and the customer service experience. It is important for agents to apply ethical principles in all their financial practices. As such, let's distinguish between unethical and ethical financial practices in health insurance. Because of their fiduciary duties, agents are under special scrutiny to acquire money and assets fairly and legally. Unethical financial practices include enrolling fake clients or family members, re-enrolling a client in the same products to get a new commission, providing fake or incorrect bank accounts to divert payments, providing fake or incorrect personal or health information about an applicant, signing a client up for the same coverage multiple times, money laundering. Most of these practices are illegal. Acquiring funds from unethical trading or sales practices can lead to loss of license, termination, or criminal charges. Agents also have an obligation to properly use and manage premiums and payments. Agents must never commingle or mix funds between clients or with their personal accounts. Never use or divert payments for their personal expenses. File payments and claims in a timely manner and in accordance with their carrier's policies. Notify clients of updates, charges, or payouts related to claims. In addition, Agents may need to make special considerations before serving or changing policies for clients in vulnerable groups. These groups, such as seniors and disabled people, can be at increased risk of exploitation from both agents and caregivers. Finally, let's discuss the ethical need for continuing education in health insurance. Laws, insurance products, and industry best practices can change rapidly, especially in the era of online business and insurtech. Agents are responsible for learning new information by keeping their license current, completing formal continuing education, self-educating about laws, products, or industry breakthrough by reading the news, reputable blogs, and other sources, pursuing trainings and networking events from their carrier or other organizations. Staying up to date on the industry ensures agents provide clients with the most recent, accurate information available about coverage and products. Laws and regulations vary by state, and cultural expectations can quickly change what is considered ethical. Agents can begin to learn more by exploring the resources listed. However, agents should discuss concerns or questions with their carrier, a trusted peer or mentor, or a lawyer. If you have any questions regarding this training video, or if you have questions about becoming contracted with Allstate Health Solutions, please contact the email address on your screen. Thank you for your time, and have a wonderful day.